Hello guys, welcome to my channel. Today I will explain the concept of double entry accounting. This channel is for teaching accounting, finance and business, so please subscribe for more videos like this. So let's get started. What is double entry accounting? Double entry accounting is simply a method used by all businesses, big or small, to book their daily transactions. And by using this method, companies will have minimum accounting errors and balanced accounts. The next question is, what does this method do to the accounts? To put it simply, let's say that every transaction has two sides, left side and right side, and each side will have at least one account. When recording a transaction, both sides will change in value. In accounting terms, a change in the left side is called debit, and the change in the right side is called credit. Now, are there any conditions that we need to satisfy or fulfill when recording transactions using the double entry accounting? Well, we've got two conditions. The first condition is that the amount that we book on the debit side of the transaction must equal the amount booked on the credit side of the transaction. The second condition is that we need to keep the accounting equation balanced. That is to say, the change in value of total assets on the left side of the equation must equal the change in value of the liabilities and equities on the right side of the equation. Now let's jump into examples. Our first example is about a delivery company called Viking LLC that purchased a new car to expand its delivery business. The value of the new car is 20,000 euros and the payment was in cash. The question is, what is the accounting entry for recording the transaction? I will share with you my personal approach of addressing this type of questions. We need to understand that all accounting transactions must be recorded in a journal entry, which is a table of 3 columns. The first column is for the account name, the second column is for the amount on the debit side, and the third column is for the amount on the credit side. So the first thing that we need to do is to draw a table for the journal entry. Now remember, in recording a transaction, at least 2 accounts will be affected. So the second thing that we need to do is to identify these accounts. In this example, Viking purchased a car to use it in its business. The payment for the car was in cash. So basically, as a result of this purchase, we will have an increase in the asset account cars and a decrease in the asset account cash by the same amount of 20,000 euros. Now we can enter the names of the relevant accounts and the values in the journal entry. So we will have 2 lines, debit cars by 20,000 and credit cash by 20,000. So the solution should look something like this. And always remember to add a description of the transaction after the journal entry. Now let's check if we have satisfied both the conditions that we talked about. It looks like that we have fulfilled the first condition, as the debit side of the transaction equals the credit side of the transaction. As for the second condition, which is to keep the accounting equation balanced, both impacted accounts in this example are asset accounts, which are on the left side of the equation. The increase in the value of the asset account cars of 20,000 euros offsets the decrease in the value of the asset account cash. So the total change in value on the left side of the equation is nil. Plus, there was no change in the liability and equity accounts on the right side of the equation. In this case, the accounting equation stays in balance. For the second example, please try to solve the question before checking the solution. Follow the same method that we used in answering example 1. Now let's have a look at the solution. Well, in this example, there is a purchase transaction of merchandise worth 1,000 euros, which will result in an increase in the asset account inventory by 1,000 euros. So the first line on the journal entry should be debit inventory by 1,000 euros. Now the payment for the boxing gloves was on credit. The sportswear shop didn't pay the supplier on the receipt of the merchandise. That is to say, the shop owes the supplier a payment of 1,000 euros. So the second line on the journal entry is to credit accounts payable by 1,000 euros. Now let's check if we have satisfied both the conditions. The first condition is that the debit side and the credit side must be equal, which we have already satisfied here. Both sides are 1,000 euros. The second condition is to maintain a balanced accounting equation. On the left side of the equation, we have an increase in inventory by 1,000 euros. And on the right side of the equation, we have an increase in the liability accounts payable by 1,000 euros. In this case, the accounting equation stays in balance and both conditions are satisfied.